Good morning, everyone. Today is Tuesday, June the 22nd, and this is the Moneyball Morning Report for the Benzinga Pro platform. The days are going to start getting shorter from here, and everybody's freaking out because we've had 4 days of pullbacks. Guess what? Markets go up and markets go down. So they don't keep going up. People are freaking out about that. But, as I mentioned several days ago, when we see a gigantic shift of everybody saying, oh my goodness, I'm totally wrong being any kind of short, and they start putting out their newsletters and XYZ, flipping the script, and when the AAII sentiment reading goes to the 1-year high, look out, we're going to have ourselves a little fade. Now, I'm not saying that this is going to be some kind of giant rollover. There's a gigantic, pervasive bid under this market simply because it appears to me that a number of people went short and went long, and now that this is that cost basis, the shorts are underwater, and the longs are going to try and push price as high as they can in order to get out of the trade with the most profit. That's what you do if you have inventory that you want to get rid of. So that's what's happening. We take a little breath after 1, 2, 3, 4, 5, 6 weeks, essentially moving straight up. And interestingly enough, we're still up in terms of the close of 2 weeks ago. Remember, always look at your current candle, 2 candles to the left. Okay, so what are we seeing? Current candle, down 2 candles to the left, lower highs, lower lows. We are trying to flesh out support. Where is that? It could be 429. That seems reasonable, right? A lot of days sitting there. Here's how we know. See how it's jammed up at this 434? That's the low of yesterday. So we pierced the low of yesterday into the low of 5 days ago, and buyers were sitting right there. And so that's going to be the line in the sand today for SPY. As long as we hold this 433.50, buyers will come in and we'll start pushing up. Here we are. This was a gap that I put, this little rectangle event here that we started filling in. We've come to the base of that. What should we see? A bounce. We should see a bounce. If we don't, what do we expect? Well, we expect that we grind our way to the south. All right? That's just what happens. And so if we lose this area, we're going to try this wick, 42.87, and then we're going to try the top of this wick up here, which is 432, and then we'll try the open of the prior day, 431.22, and then the low of the prior day, 430. It's the same story every day, folks. It literally is. Focus on price first. Everything else is going to fall into place. Do not use derivatives of price, a la technical indicators, to give you the go-ahead for what it is that price is supposed to do. Now, am I saying all technical indicators are horrible? Of course not. I have a moving average ribbon sitting up here. Of course they're useful. They tell me trend, they tell me momentum, they tell me how people are feeling, but what should make you execute is how they're behaving at price. So let's take a look at the cues. Again, are we below the close of the prior day? Yes. We're battling that in the SPY now. We are below it. In the cues, we tested it and we're headed downward. So tech is taking a breath, right? And it should. If I had made this much in tech, I would be taking some profit off, okay? Particularly if I started losing my major averages, which is what a lot of folks look at. And so now we're going to sort of see how we can do. Maybe we get to hold 356. All right? Are buyers going to come in here? You betcha. You betcha. Gap, They're going to come in, they're going to try and hold the edge. What's going to happen if we lose 360? Well, I don't know, to be honest, but here's what I suspect. I suspect if buyers come in here and push and push and push, and they cannot get above the close of the prior day, which is incidentally the high of last night, price action is going to fade. And where is it going to fade to? It's going to fade to this wick, 357, approximation, right? So you anticipate that sellers will become more emboldened when we lose this edge, and then we get to fill in all of this motion, right? We've got thin profiles all over here because of a gap up. All of this to me is short covering. All of it's short covering. This is a rally that people just did not expect. A couple of things we want to look at. No, I won't do that. I'm going to do it with the futures. Let's start with the ES, doing the same thing. This is the 5-day fade of the ES. It's filled the gap, right? So this gap area is going to be a region to look at. It danced around there for hours yesterday. How do you know it had a shot of losing? Well, if it comes in here and dances around, what do you expect? You expect buyers to come in and hold it if it's bullish. So buyers did come in, and where'd they push it? 44.40. But guess what? Immediately as they got up there, sellers came in and started pushing it down. And so, again, high, low, lower, high, lower, low. Lower, high, lower, low, only by a tick, maybe. Okay? So when it punches up and gives you another lower high, you can anticipate that the break is on the horizon, right? Go to the tight time frame, look for the failed retest of the line, which would be the close of this big candle, and then you can say to yourself, all right, here I go. Same thing. Am I getting above the close of the prior day? No? Uh-oh. That means sellers are likely to come into the fray. And where are they going to go? They're going to go to the next wick they can find on the daily. We traders, we're simpletons. We go level to level and nothing else. Literally, that's all we're doing as futures traders, truly. So you just get to near the level and watch the participants. When you figure out what they're doing, engage. It's as simple as that. All right, here we go with the NQ. Same thing, right? Can't get up over the close of the prior day. Coming down, where's it going to go? Probably this wick, right? What's that high? 14,967. That's where the traders are going to say, you know, maybe I try to hold that edge. And if they don't, they'll come down here, right? 4,919. That's it, right? But what are they doing? They're trying to find support. If it's not this wick, it's this wick. If it's not that wick, it's the other wick. How do you know? You don't. So watch the price. And that will tell you what to do, right? I hear people ask that question all the time. How do you know? I don't know. I don't have a crystal ball, but I can tell you this. If it comes into the price, I can figure out what's going on. And right here, they are going to try and battle to hold the prior day's low. They've already lost it. So they're coming in at that 15th. I don't mean to be snarky. Did that sound snarky? I didn't mean that. What I'm trying to say is, listen, trading is a lot simpler than we make it most of the time. We start second guessing everything. Just pump the brakes, look at the price, and follow it. If you go, I don't have time to look at the charts all day long, then you look at it at the end of the day, you approximate the risk, you look at the trend. What are the two candles doing? What do I think is going to happen here? What is this trend? Up. They're looking for support. And so that's what you're going to look for. If you're thinking to yourself, oh, I want to see this bounce. If you're looking at a daily chart, you better not jump in here because who knows what could happen. It could drop to here. We don't know. What we do know is they're trying to find the support. I like to look for heavy congestion on support. What's heavy congestion? 3, 4, 5, 6 candles around the edge. I don't really see any of that here. I see a ton of it down here. Could it be that the pressure's so great it's going to continue to move up? Yes, but maybe not. Okay? That's what you want to look for. But right now, buyers are going to try and come in. 2 things. The quant stats on placeyourtrades.com are telling us that the dip action down here near 70 coming into the support zones going to have good buying opportunities. So watch that floor. I posted something on it on Twitter. Have a look. Looks pretty good. I like it around that 70, 75. But we'll see, right? We've got releases today. And bad news for the gold bugs, folks. See this? Really big traders will say, gold is a trading vehicle. It's nothing more than that. You do not want gold to go to 5,000 because that means something terrible is happening. So we're going to watch the fade. Are buyers going to try and come in here? Yes. I said a couple of days ago, 1951, if it doesn't hold there, we're going to have ourselves a fade. And that fade, folks, it could come all the way back to 1700, right? Absolutely 100% could fade in that space. And right now, all their congestions are giving it up, right? So sell the bounces, 1950, the next area, and it's all selling for now. Take care. I'll see you tomorrow. And again, if I sounded snarky, I didn't mean to. Sometimes I just get so, about the... I'm high strung. We all know this. I'll see you all tomorrow. Thanks for watching.